Hi, everyone. I'm Katie Talati, Director of Research at Arca, and this is What's Driving Token Prices. For those of you who are new here, I'm responsible for identifying and analyzing digital asset and blockchain opportunities for Arca's funds. As part of our research, my team and I examine token prices and the market events that act as catalysts for price change. Based on our research and market events over the past week, here are some notable token price movements and what we think drove these moves. As a reminder, this commentary is not intended to be investment advice, investment research, or an investment recommendation. Please consult your investment professional for your own circumstances. All right, guys, so as I'm sure many of you have seen, it has been a volatile couple of days. So we're going to dive right in, starting with OSMO. So Osmosis is a Cosmos-based DEX, and it was exploited last week for about $5 million, prompting the team to halt the chain entirely. Unfortunately, after the 5 days of downtime, the chain was relaunched. This was on Sunday night, and immediately saw a 40% decline in TVL as users withdrew their assets. As a result, Osmo ended the week down 23%. All right. Next up, we have Chili's, or CHC. So fan token platform Socios announced yesterday that they have integrated with PayPal, making them the first blockchain-based platform to allow PayPal fiat deposits in Europe. So for those of you who aren't as familiar with digital assets technology, fiat on-ramps in the space are kind of like one of those hard things that projects have to get over, essentially to allow non-crypto native consumers to get access to their apps. Because if I told you, hey, in order to do this, you need to put Ethereum in your MetaMask wallet and then use that MetaMask wallet on that project's website, you're going to be like throwing your hands up like, no, not happening. And so we really think that it's really great when projects can actually get integrations with current fintechs such as PayPal, such as Venmo, such as any, banking company. And, that's why exchanges are so successful, because they offer an on-ramp into crypto. So this is a pretty big deal for them. I think, since they're trying to, solve and bridge the gap between non-crypto native users and folks already in crypto, it's really melding the worlds together wonderfully. Unfortunately, even despite this positive news, Chili's is down 21% on the week. All right, next. So, as everyone expected, I'm going to talk about Celsius. This is going to be a longer one since it has now impacted a lot of parts of the market. So Celsius is a lend borrow platform, and they basically made waves this weekend when rumors spread that the company became insolvent as they halted withdrawals from their platform on Sunday night. So Celsius promises users high yields on assets it deposits, and that's deposits of Bitcoin, ETH, stable coins, other digital assets. And basically, it's reportedly known that Celsius generates these yields via DeFi. So they're not just turning, most lenders or most banks would go and take your deposits and then they lend it out for a higher rate. And then they take a piece of that spread and then you get part of that spread. So say you deposit your assets, you're promised 5%, they lend it for 7%, you get back 5%, they keep the 2% in between that they make. So in order to kind of juice those returns or to offer higher yields for higher deposits, Celsius was engaging in DeFi activities such as yield farming, having different types of leveraged positions, and this seems to have gotten them in trouble. So in this case, Celsius reportedly was staking ETH in Lido in return for staked ETH. So if you're new to this, just you can stake ETH in a liquid staking derivative, which allows you to take your a derivative version of your staked ETH elsewhere. Since once you stake ETH on the Beacon chain currently, there's no way to get it unlocked or unstaked until the merge goes through. So basically what was happening, or what was reportedly happening, is that they were staking ETH in Lido in return for the staked ETH. And then they were levering up on that position by depositing the staked ETH into Aave, another lend borrow protocol, as collateral. And then they were borrowing more ETH against that and depositing it into Lido again, getting staked ETH, repeat, wash, fold, repeat, wash, dry, repeat. So this is basically what they were doing. So with the market kind of in free fall in the last few weeks and all the volatility, the staked ETH to ETH peg, which should be 1-to-1, became destabilized. And it basically meant that Celsius suffered margin calls as they were forced to top up their positions on Aave. And then as a result, it just caused kind of like cascading liquidations across other positions there. Their collateral went lower. So they really had to sell a lot of assets to meet these liabilities. So many believe currently that Celsius is insolvent. It actually came out today that they've engaged a group to help with restructuring, whatever that potentially means. But however, at the moment, what's going on there is kind of just speculation. However, as a result of all this turmoil, Celsius is down. Celsius token is actually only down 16% on the week by some miracle, although on Monday it was down as much as 72%. Unfortunately, it has brought the market down with it. ETH is down 33%. Bitcoin is down over 20%. Staked ETH is down 36%. The Lido token, as the issuer of staked ETH, is down 41%. So that is a bit of a recap of what happened in the market and why things seem to be a lot more violent than usual. So yeah, that's all I've got for you this week, guys. I hope you enjoyed our insights. Tune in here again next Wednesday at 1 p.m. Pacific to hear what's driving token prices.